Sometimes it takes a ground-shaking event to get the public's attention.
Now, several lawmakers are under fire for selling major holdings at the beginning of this stock market sell-off.
In March 2020, Senators Richard Burr, Kelly Loeffler, Dianna Feinstein, and James Inhofe were all accused of using insider information to profit in the stock market. And the news had a ripple effect.
Resignation.
He must resign from the Senate and face prosecution.
Ultimately, this all comes down to greed.
It'll shock a lot of folks, but senators and members of the House are allowed to trade in individual stocks.
Richard Burr, the chairman of the Intelligence Committee, stepping down.
The Department of Justice is going to be closing the investigations.
Up until the 2008 financial crisis, lawmakers were under few restrictions, and the public wasn't privy to much. In 2012, the Stock Act was passed to clean up Washington. But recent events have yet again thrust the issue of insider trading to the forefront.
The Stock Act is enforced by the Department of Justice and the Securities and Exchange Commission. And where do they get their funding? They get their funding from Congress, which is the very body that they are supposed to be regulating. So the Stock Act is good, but I think we need to do a whole lot better.
How big of an issue is insider trading in Congress? How does it work? And what's being done to stop it? The SEC defines insider trading as buying or selling a security in breach of a fiduciary duty or other relationship of trust and confidence, while in possession of material, non-public information about the security. Insider trading has long been the bane of Wall Street, its regulators, and law enforcement. And some Wall Street heavy hitters have paid a heavy price. But insider trading isn't just done by wealthy financiers or celebrities. Politicians have unique insight into what most outsiders don't.
The size and scope of what Congress is involved in has broadened dramatically. I mean, whether it's healthcare, whether it's defense, whether it's financial markets, and they have market-moving information, and they're going to act on that information. I mean, information is king.
A groundbreaking 2004 study by a group of professors and researchers examined the records of U.S. senators between 1993 and 1998. The study found that a portfolio tracking the stocks that the U.S. senators bought during the same time period outperformed the market by 85 basis points each month, and a portfolio that tracked the stocks that the senators sold during the period lagged behind the market by 12 basis points. The study concluded that the senators knew appropriate times to both buy and sell their common stocks.
Either they're geniuses at trading on the stock market, or they had some inside information that we did not have.
Insider trading by corporate insiders is a criminal offense, but those rules are ambiguous for congressional lawmakers.
If you sit on the Senate Armed Services Committee and you know that a bill is going to pass that's going to benefit certain defense contractors, and you buy stock based on that information, many legal scholars would say no, insider trading laws don't apply because it doesn't involve material corporate knowledge.
In 2006, the Stop Trading on Congressional Knowledge Act was introduced. It would prohibit members and employees of Congress from profiting on non-public information they obtained in their official roles. Its co-sponsors, Congressman Brian Baird of Washington, Congresswoman Louise Slaughter of New York, urged the Department of Justice to investigate how widespread insider trading was on the Hill. It received 13 co-sponsors and died shortly thereafter. The 2008 financial crisis turned out to be a free-for-all for insider trading on Capitol Hill. According to a Washington Post expose, 35 members, including then-Minority Leader John Boehner, cashed out on information they received from meetings with Treasury Secretary Hank Paulson and others.
So I think there had always been sort of an understanding that this behavior was going on, and there was evidence that it was. But when you had the virtual collapse of the markets in 2008, it really brought into relief in a dramatic way. That was really sort of a seminal event because it offered this laboratory, this test case that you could examine.
A 2020 study published in the Journal of Finance found evidence of abnormal trading practices 30 days before the government dispersed stimulus funds during the 2007 to 2009 financial crisis. Those trading practices were most pronounced from corporate insiders with recent political connections.
That is a good and necessary thing.
In 2012, the Stop Trading on Congressional Knowledge Act, or STOCK Act, finally passed.
We were sent here to serve the American people and look out for their interests, not to look out for our own interests.
What the Stock Act did is it made
made perfectly clear that members of Congress stand in a position of trust and confidence, and that duty is owed to the U.S. government and to the citizens of the United States.
This time, the bill passed overwhelmingly, 417-2 in the House and 96-3 in the Senate. Senator Burr, a Republican from North Carolina, was one of 3 senators who voted against it.
You also had this sort of interesting confluence in American politics at the time. You had Occupy Wall Street, which was primarily a liberal left phenomenon. You had the Tea Party, which was a libertarian or conservative movement, both very distrustful of what was going on Wall Street and what political figures were doing as it related to financial regulations, et cetera. So those, I think, brought together a consensus point and led to the passage of the Stock Act.
In March 2020, news spread that 4 U.S. senators, including Burr, were being investigated for insider trading.
Ahead of the drastic escalations in this pandemic, while still reassuring citizens that the U.S. was prepared,
Senator Burr vehemently denies the allegations against him, but here's what we know. On January 24th, the Senate's Health Committee held a briefing with CDC Director Robert Redfield and White House pandemic advisor Dr. Anthony Fauci, according to the Washington Post. About 2 weeks later, Burr and Tennessee Senator Lamar Alexander wrote a Fox News editorial that the U.S. was better prepared than ever to deal with a pandemic like the coronavirus. Less than a week later, the Dow set an all-time record, hitting just over 29,551 points. On February 13th, Burr sold between $630,000 and $1.7 million worth of investments. He did it in 33 separate transactions, and he didn't buy a single share. Perhaps worse, Burr may have discussed the stock sales with his brother-in-law and others, according to reporting by ProPublica and a secret recording obtained by NPR.
There's one thing that I can tell you about this. It is much more aggressive in its transmission than anything that we have seen in recent history. It's probably more akin to the 1918 pandemic.
Not only is that turning it into a conspiracy, but you're creating potential witnesses against you. I mean, the brother-in-law is going to be questioned by the FBI, and either he's going to have to be honest and possibly incriminate Burr, or he's going to lie, and that's a crime in and of itself.
Burr released a statement. I relied solely on public news reports. I spoke this morning with the chairman of the Senate Ethics Committee and asked him to open a complete review of the matter with full transparency.
Yes, Scott, Mitch McConnell just announcing that Senator Burr is going to step down as the chairman of the Senate Intelligence Committee.
That investigation into his trades is ongoing.
He had already announced he was not going to run for re-election in 2022, so perhaps he, was going to save his retirement. I don't know, but it was a very egregious case.
Georgia's junior Senator Kelly Loeffler was at the same January 2020 briefing as Burr. And over the next 2 weeks, Loeffler and her husband, Jeffrey Sprecher, the CEO of Intercontinental Exchange and chairman of the New York Stock Exchange, sold between $1.2 and $3.1 million worth of stocks.
And also purchases a big chunk of stock in Citrix, which runs like telemeeting software, which just seems like amazing luck.
I don't find out about these trades until these reports are compiled at the end of the reporting period. So I had no knowledge of these companies. And in fact, it was a mix of buys and sells.
Oklahoma Senator James Inhofe sold as much as $400,000 in stocks on January 27, 2020.
We're learning that this insider trading investigation on Capitol Hill by the FBI is more wide-ranging than we knew even this morning. Senator Dianna Feinstein's office now confirming
the lone Democrat to be implicated, California Senator Dianna Feinstein, and her husband are reported to have traded somewhere between $1.5 million and $6 million worth of stocks in a nearly 3-week period between January 31st and February 18th.
It's a very troubling sort of thing. And my point would be that ought to be investigated. How you prove in a legal context insider trading is one issue, but we'd be better off with a system that simply said you can't own private equities in this manner, or your assets that are in a blind trust and you don't even know what the mix is.
Sarah, the Wall Street Journal is reporting, according to its sources, that the Department of Justice is going to be closing the investigations of...
On May 26, 2020, the investigation into Loeffler, Feinstein, and Inhofe was closed.
If you're very sophisticated about this, you're going to be able to get away with it and have enough plausible deniability so that you're not going to be held into account.
Meanwhile, the presidential campaign of Joe Biden announced in July 2020 it was banning stock trading by staff members. The decision came a few months after a pointed March warning from the SEC against illegal trading during the coronavirus disruption. The Trump campaign did not respond to CNBC's request for comment on its stock trading policy. Members of Congress had long believed the best check on conflicts of interest or insider trading was the fact that they stood for election every 2 years, and they felt that disclosure, as well as the accountability that comes with holding elective office, was a sufficient check to prevent them from financially taking advantage of their positions. It wasn't. So the Stock Act was supposed to put an end to congressional insider trading, and to a large extent it has. Greg Holman, a government affairs lobbyist with Public Citizen, has worked closely on the Stock Act. He conducted a study on trading in the Senate in the 3 years prior and the 3 years after the act was passed.
It reduced stock trading activity by members of the U.S. Senate by 2/3. However, the other finding was of the 1/3 of the senators who are still actively trading, they are trading in stocks and businesses that they directly oversee from their official duties in the U.S. Senate.
It's often said the best solution would be just to prohibit members of Congress from owning stock altogether.
The markets are so key to my retirement future, your retirement future. If we had an entire class of decision makers in Washington, D.C. that had zero interest or stake in how markets were doing, I think that would create a dangerous disconnect.
In 2018, Senator Elizabeth Warren proposed a sweeping new legislative package, the Anti-Corruption and Public Integrity Act. The main intent is to eliminate the influence of money in the federal government.
It's time to ban elected officials and senior agency officials from owning or trading any company stocks while in office. They can put their savings in conflict-free investments like mutual funds, or they can pick a different line of work.
That bill does strike a balance, which I think is very important. We want them to embrace it and be concerned about how the market is performing, but we don't want them to be able to manipulate it.
But Warren's proposal goes even further. It includes a lifetime ban on lobbying for presidents and federal lawmakers, among other things. The bill most likely to get traction, at least at the moment, is the Ban-Conflicted Trading Act proposed by Democratic Senators Sherrod Brown and Jeff Merkley. We asked Senator Sherrod Brown about the bill, and his office sent us the following statement.
It's simple. Members of Congress should not be allowed to own individual stocks in individual companies, then vote on those same issues because of its conflict of interest. And owning stock by itself is a conflict of interest because we vote on all kinds of things that affect families and affect this economy.
I've been able to round up a lot of endorsements within the academic community and civic groups. And so we are hoping that we can get it moving.
Getting either bill through a divided Congress could be challenging, particularly in an election year and particularly during a pandemic. But if the Democrats do manage to take the Senate and presidency, the chances of passage go up exponentially.
People, I think, are becoming, in a way, skeptical that the process is clean in Washington, D.C. And I think that skepticism actually is a very good thing for an informed electorate.
Reformers ride on scandal to try to get some of this legislation through, and I'm hoping to see that happen again.